Hey everyone, welcome back to Corporate Decoder. Today, Houlihan Lokey Incorporated HLI just filed their latest quarterly report, and I am seeing some interesting shifts in their business that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. Their revenue is down, but some expenses are also falling. And it looks like they are shifting some of their focus. Let's dive into Houlihan Lokey's financial picture. As of the 30th of June 2026, their total assets stood at $3, 717 million, a decrease from $4, 309 million in March 2026. This dip is mainly due to a significant drop in cash and cash equivalents, which fell from $1, 189 million to $745 million. Investment securities also saw a big decrease from $170 million to $52 million. Looking at liabilities, total liabilities decreased from $1, 856 million in March 2026 to $1, 352 million in June 2026. A big part of this change is the decrease in accrued salaries and bonuses, which dropped from $1, 077 million to $589 million. This likely reflects the lower revenue for the quarter. Now, let's talk about their income. For the 3 months ended the 30th of June 2026, revenues were $511 million, down from $605 million in the same period of 2025. That is a 16% drop in revenue. Operating expenses also decreased from $515 million to $433 million. This decrease in expenses, however, did not fully offset the revenue drop, leading to a lower operating income of $78 million compared to $90 million in the prior year. Net income attributable to Houlihan Lokey Incorporated was $78 million for the quarter, a 20% decrease from $98 million in the same quarter of the previous year. This shows that while they managed to cut costs, the lower revenue had a noticeable impact on their bottom line. When we look at cash flow, things get interesting. For the 3 months ended the 30th of June 2026, net cash used in operating activities was a significant $336 million outflow. This is a big jump from the $132 million outflow in the same period of 2025. The main reason for this increase in operations is likely the timing of bonus payments. Companies like Houlihan Lokey often pay out a large portion of employee bonuses in the first and third quarters, and this period seems to have captured a big chunk of that outflow. On the investing side, they had a net cash inflow of $112 million, mainly from selling investment securities. This helped offset some of the cash drain from operations. Houlihan Lokey operates in 3 main segments: corporate finance, financial restructuring, and financial and valuation advisory. Corporate finance, which is their biggest revenue generator, focuses on mergers and acquisitions and capital markets. Financial restructuring helps companies in distress, and financial and valuation advisory provides a range of opinions and services. Looking at the segment breakdown, corporate finance revenues were $303 million for the 3 months ended the 30th of June 2026, down from $398 million in 2025. This 24% drop is a key reason for the overall revenue decline. The company attributes this to a lower average transaction fee, which they believe is due to the mix of deals rather than a long-term trend. Financial restructuring revenues were $119 million, down 8% from $128 million. This decline is linked to fewer closed transactions. Though the average fee per transaction increased, financial and valuation advisory, however, showed growth. Revenues here increased by 13% to $89 million, up from $79 million. This segment saw an increase in the number of fee events, indicating stronger demand for their advisory services. The company's management points to a 16% decrease in overall revenues for the quarter, primarily driven by lower performance in the corporate finance segment. They also mention a slight decrease in non-compensation expenses, helped by a reduction in acquisition-related costs. It is also worth noting their share repurchase activity. In May 2026, they repurchased over 1 million shares, with a significant portion of those being shares withheld to cover employee tax obligations on stock awards. This is a common practice and suggests continued equity compensation awards. Now, looking at these results, Houlihan Lokey seems to be navigating a more challenging market, particularly in its core corporate finance business. The drop in revenue from this segment is the most significant factor affecting their overall performance. However, the growth in their financial and valuation advisory segment is a positive sign, showing resilience and diversification. The large outflow in operating cash flow is something to watch, but it is likely tied to predictable bonus payouts. The company's ability to manage expenses even as revenues fall is a strength. The risk I am watching is the continued reliance on the corporate finance segment and whether the current deal mix will persist. My biggest concern is the sensitivity of their revenues to market conditions impacting M&A activity. What I am actually looking for is a sustained recovery in deal flow and average transaction fees within their corporate finance division, or further acceleration in their advisory segment to balance out the portfolio. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.